eventually they must have been desperate, they hired me. So I became a mutual fund salesman at...
Leechin is a famous Jamaican, Canadian, billionaire, businessman, and a philanthropist, and also the chairman and the CEO of Portland Holdings, a privately held investment in Ontario, Canada. He was also appointed to the Order of Ontario in 2017.
I made $400. I said, whoa, that's 160 hours of bounty.
Please, viewers and subscribers, remember, share the link on all social media platforms and watch the ads and comment, share and like, because it do help us out a lot. His full name is Michael He's a true-born Jamaican who grew up in Port Antonio, Jamaica, born on the 3rd of January 1951. He would be 71 years old at the time of this production. His zodiac sign, a Capricorn, loved and married by Miss Vera Leechin, but apparently the couple relationship was ended in 1991. But for some unknown reason they didn't divorce, but Leechin transposed his relationship from Miss Vera to Sonia Hamilton. Leechin is the son of Aston Lee, and his mother goes by the name Miss Hyacinth Gloria Cheng. Let me tell you that both Leechin parents are biracial African and Chinese Jamaican. Leechin children goes by the name Adrian Leechin, Paul Leechin, Maria Leechin, Elizabeth Leechin, Michael Leechin Jr. And Leechin network is $1.4 billion US.
Whatever he's doing, I'm gonna check it out. So I went to this local mutual fund.
In 1965, Leechin's first job came working as a part of the landscaping team of the French Cove Hotel, and the next year, he got a summer job working on Jamaica Queen cruise ship cleaning the engine room. And in 1970, Leechin went to Canada on a scholarship program sponsored by the Jamaican government to study civil engineering at McMaster University and graduated in 1974. Leechin financed his first year at university on his own, but after that was able to attend on scholarship. After graduating from McMaster, Leechin worked briefly as a road engineer for the Jamaican government, but unable to find work in his qualified field, and allegedly, because his Canadian wife did not like living in Jamaica, he returned to Canada, where he began graduate studies in business. At first, Leechin worked as a bouncer, but later found employment as a financial advisor for Investors Group.
Whatever he's doing, I'm gonna check it out. So I went to this local mutual fund.
Leechin spent 2 years at the Investor Group in the Hamilton, Ontario office, and in 1979, Leechin moved to Regal Capital Planners and became regional manager. While at the company in 1983, Leechin secured a loan from the Continental Bank of Canada for $500,000 Canadian to purchase a stake in Mackenzie Financial Group and form Kicks Athletics with Andrew Gale. By 1987, the investment was worth $3.5 million Canadian. And in 1987, Leechin took the proceeds from his Mackenzie investment to buy a Kitchener-based company called the Advantage Investment Council, a division of AIC Limited, for $200,000 Canadian at the time. The company had holdings of around $800,000 Canadian. It renamed the company AIC and developed it to a fund that today controls around $6 billion Canadian with hundreds of thousands of investors. Following the acquisition of AIC Limited, Leechin set up the Berkshire Group of companies, comprising an investment planning, armor securities, dealership, and insurance operation. By 2007, Berkshire had accomplished more than $12 billion Canadian of assets under administration. In 2007, Manulife acquired Berkshire from Portland Holdings in exchange for shares, making Portland one of the largest shareholders of Manulife.
I had to be selling investments in Canada. So that was my beginning.
In 2009, Leechin sold AIC Limited to Manulife for an undisclosed amount. The following year, Manulife rebranded the Heritage AIC funds and eliminated the AIC name from the mutual fund lineup, in addition to being the founder and chairman of Portland Holdings. Mr. Leechin is chairman and director of Manulife Holdings, and executive chairman, CEO, and portfolio manager of Portland Investment Council. Had accomplished more than 12 billion Canadian dollars of assets under administration. In 2007, Manulife acquired Berkshire from Portland Holdings in exchange for shares, making Portland one of the largest shareholders of Manulife.
Mutual fund company's office, and they gave me this psychological test, which I, by the way, failed.
In the late 1980s, AIC suffered from a collapse. The real estate market in which it had invested recovered throughout the early 1990s by maintaining investment in large groups such as Merrill Lynch, TD Bank formerly Toronto Dominion. This caused investment to grow from $8 million US in 1990 to nearly $8 billion US by 1998. Leechin was reluctant to invest in the dot-com boom and saw AIC investment lose 8% in value, even as the SAP gained 56%. Investors moved $224 billion US out of AIC flagship Advantage Mutual Fund. The Globe and Mail ran an article predicting that even more investors would leave the fund, meaning that it would run out of cash and be forced to sell its core holdings. Leechin's response was to sell stock in Coca-Cola and invest $65 million in US into Mackenzie Holdings, the same firm in which he had invested $400,000 US. 16 years previously. Letters were sent to all 350,000 investors explaining the tragedy. The investors were calmed by the purchase and the stock was later sold to Investor Group, the same company Leechin had worked for in the 1980s, at more than twice the price AIC had paid for it. In 2000-2001, following the dot-com crash, AIC outperformed the market with 26% growth and 4% decline respectively.
In Canada. So at age 26, you know no one with money. And coming from Jamaica, you know no one.
November 2003, the AIC was a part of a regulatory investigation involving 105 Canadian mutual funds companies. In its review of AIC, investigators found no evidence of late trading and marketing timing activity by AIC staff. However, the Ontario Securities Commission did find over the 1999-2003 period, AIC permitted specific third-party investors to engage in market timing trades in AIC funds that generate profits of $127 million in US. In the settlement agreement between AIC and the OSC, the OSC stated that accordingly, the conduct of AIC in failing to protect fully the best interests of the relevant funds in respect of the frequent trading mark timing was contrary to the public interest. As a result, in December 2004, AIC Limited was forced to return $58.8 million to affected investors, which was the largest penalty imposed on any of the fund companies in the OSC investigation.